Andrea, Ian, welcome to the show. Thanks for joining us.
Great to be here.
Thank you so much for having us.
Andrea, do you want to start by just telling us a little bit about your background and how you came to be running this venture capital business?
My background, I was a full-time climber, and then, before that I was a social worker, then I was a full-time climber. Then I got a scholarship, studied law in London, worked as a lawyer for a while, then an investment banker with Lehman Brothers, and then the international division of the Bank of Scotland when I moved up to Scotland to be with Ian. And then we came to Australia, and Ian, as an entrepreneur, found that it was a very almost non-existent ecosystem, and there was no structure to support entrepreneurs. So he started Innovation Bay, which I'm sure he'll tell you a little bit about. I was a full-time mum and terrified that my brain would atrophy beyond redemption, and just used to go to the pitch events, probably because it was nice to go out for dinner. When as an entrepreneur, we couldn't afford going to restaurants. But after a while, there's a bit of pattern recognition, and we saw one of the co-founders of a company called Storage's pitch, and it was the first to market with deduplication software for the cloud. And we thought, this is pretty amazing. Some of the big firms had been trying to sort of crack this problem, and it had the potential to save hundreds of millions in big data storage costs for their customers. So we decided we'd invest in it. We didn't have much money. I think we pulled together a massive check of about 10K and got an allocation, and Ian got on the phone and sold the allocation, and Gilbert and Tobin were sponsoring Innovation Bay. So Deborah Johns was a rock star and took me under her wing and told me how to structure the deal legally, and showed me what a term sheet of this sort of transaction looked like, and took me through it. And that's how I started. The happy outcome of that investment was that 3.5 years later, we returned 10x to our investors. But it was obvious that there was an appetite amongst investors for this asset class, but a lot of fear because it was so high risk. So I thought, well, the one thing I do have was pretty extraordinary deal flow via Innovation Bay and Ian, and I can learn the rest. So I started leading syndicated investments under the name of Jelix Ventures, and eventually got about 20 million under management, and then raised a fund, and we're soon to start raising another fund.
What was the biggest learning curve from doing syndicated deals through to then running a fund? Or was there much change, or was there a big change?
I think that the biggest difference is that when you weren't running syndicated deals, you're not making decisions on the size of check to write, just whether or not you think this is a good investment. Whereas a venture deal, you have to really consider the whole power law game and make sure that businesses that you invest in have that potential to return the fund, that their market is really, really huge. And look, for us, the big objective with a fund is that you actually have your capital concentrated on the winners. That's what you want to end up with, those that are doing really well. And that was the thing I was really anxious about, because I had no experience in doing that. So I'm delighted to say that we have our capital in this Fund 1 firmly focused on the winners. So we're quite excited about that. But I think that's probably the biggest difference.
Ian, from your perspective, did you see when you sort of were first in the early days of the Australian tech scene, or the early days of what it is now, I guess, you had Innovation Bay, did you see this sort of pattern emerging with venture and those types of things at a track?
That's going back to the whole history. I mean, it was strange when we started Innovation Bay. Like, I moved here and didn't know anyone, and I'd met Faden, who I started Innovation Bay with, and we got on, and he was running a recruitment business focused on tech, and I ended up running what really became a software business in video. We both had this passion for bringing great people together in that tech space. So words like ecosystem and startup community just didn't exist. So we were kind of stumbling through the dark all the way through. I mean, this is early the 2000s. I mean, 2002, 2003, we started Innovation Bay. I mean, it's been going 21 years. It wasn't really until we started doing the angel dinners that Andrea alluded to that we really saw the potential of the ecosystem. And the first one then, I think it was 2009 or 2010. So it's still pretty early. Amazing companies came through that. I mean, Andrea mentioned Storage's, but Expert 360, Posse, Car Next Door. I mean, there's some incredible successes that came through that. So we kind of saw the potential for what we were doing. And then the funds came along. I mean, it was really 2013, I think Blackbird launched.
Yep.
One Ventures had been going even before that. Airtree not long after, Square Peg about the same time. Then Canva and Atlassian. And it was just this slow moving but giant becoming, if that's a word, snowball. And it's really been the last 10 years. It's just been this acceleration of money, of knowledge. The talent of the average, talent and knowledge, I'd say, of the average startup founder is way better than it's ever been. And that's partly, it's education. It's peer learning. I mean, some of the stuff we've been doing at Innovation Bay has been kind of critical to that. And it's been, great being on that capital allocation side. I mean, I think one thing I found personally is I liked being down the rabbit hole of my own startup, but you really are down the rabbit hole. You don't see anything else beyond your customers, your investors, your staff. And, when I joined, I did 4 years running the US startup team, and I really enjoyed that, just seeing a broader perspective and then seeing what Andrea was doing, having started Jelix. And it was just a natural evolution. I wanted to get out of the corporate world and really help the ecosystem.
So in terms of your day-to-day, where's most of your time spent? Is it tell us a little bit more about the expanded version of your business these days.
You mean Innovation Bay?
Sure. Yep.
Where do I spend my time? I spend 4 days a week on each is what it feels like. Currently, it's roughly 50-50. But it's a really difficult balancing act, and it's kind of unsustainable. I'm trying to do 2 full-time jobs part-time. Yep. So the plan is that I will step back from Innovation Bay and try and go to more like a day a week. And that's fairly imminent, probably by the end of the year. I mean, Innovation Bay it's decent business now, and it's just ticking along. It's got a team. Baden's full-time CEO. We've got Cam Webb, who's a really strong executive as well. So that's fairly good and safe hands. But I love what we're doing there. And I do want to double down on Jelix. It's a really exciting opportunity. I really, really enjoy it.
Take us through the decision-making process at Jelix. How does that work? And what's it like working with Ella?
Amazing. I'll let her answer the rest.
So are you talking about general decisions or investment decisions or both?
Investment decisions.
So investment decisions. So Cam, our investment principal, screens all the deals, and the strongest ones, he then gets Ian to meet the founders and have a look at it. And then if they both really like it, then it comes to me.
And I'll screen them if that happens. But
yeah. Basically, and then I'm once I meet them, and if we're all very keen, we'll start on the due diligence process and agree some basic terms before we get too far down that road, because sometimes things like valuation and some of the investor protections, they're going to kill the deal on founder vesting and valuation. They're the two that we want to sort of get agreement on before we invest too much time and effort, because those things with very new founders, especially first-time founders, can kill the deal. So we get that sort of high-level agreement, agree terms, finish the DD process, and then it goes to our investment committee. And then once that IC paper, Cam prepares an investment committee paper, it goes to our IC, the IC discusses it, the founders usually present at the IC. They don't pitch to us, but they're there for a Q&A, so that any outstanding questions that IC members have that maybe weren't covered in DD, we ask the founders about, then make the decision. That's how it works.
What are you guys looking for in a founder? What are the key 2 or 3 traits that really stand out, or are there?
I'm looking for a few things: a voracious appetite to learn, so unimpeded by some of those, the impediments of something like arrogance, where you think you know it all and you don't have a great openness to learning. I don't care how much intellectual firepower you have. That cripples learning, I think. So we just want someone who has a genuinely voracious appetite to learn, because at the early stage that we invest, they are going to have to be really good learners. They're going to have to learn a lot of different things, and they're going to have to be a bit of a jack of all trades until they grow enough to hire people to do the things that they're weak at. That's really important. I really am very positively biased towards someone that has experienced the problem as a potential customer and is really passionate about wanting to fix that problem and alleviate an acute pain for a lot of people around the world, if you're not. And I think, because I think if a founder's just wanting to make money or be a founder because they think it's sexy and attractive. I don't think that's enough strength of motivation really to get through some of the troughs, because it is a roller coaster ride being a founder. The troughs can be very, very deep and tough to get through, and the highs can be quite jubilant. But going back to those troughs, a lot of people talk about an essential characteristic of a founder being resilience. And there's almost an assumption, and I think it's quite a masculine sort of assumption, that means, you've got to be really tough and just tough it out. And I actually disagree with that. I actually look for someone that is good at long-term relationships and have built really good, strong support systems around them so that you can feel like on the floor and you can turn to your support networks and then talk about it or whatever, and then feel a bit bolstered and brush your knees off and get up and get going again. Because I think that's much more sustainable, because a long, long time ago, I worked in private practice at one of the biggest law firms in the world. And in our department of 21, we had literally seven full-on psychiatric breakdowns where smart, normally psychologically healthy, mentally healthy people were so exhausted that one of them got carted off in an ambulance 5 o'clock in the morning. But it was 5 o'clock in the morning at work, and we worked crazy, crazy hours. But the guys would just tough it out. And I remember one day one of my colleagues, and she was just crying because she was exhausted. And then she looked up, she had a wicked twinkle in her eye, and she said, but we've got one over the blokes. And I said, what do you mean? And she said, at least we can cry and then we can get on with it. They just think they have to be really tough the whole time. She was upset. She was exhausted. She was talking to me, and that was helping her deal with it, the emotional and mental side of it. And I think that's much less, you're not leading towards the snowball effect of trying to be tough for too long and then risking a big explosion or a big breakdown or something.
So if that resilience is not the attribute you're looking for, or is it your definition of resilience is different?
It's looking for people that are good at long-term relationships, build strong relationships professionally and personally. They've got the support there for them when they need it. I also think long-term relationships are better in business as well. A lot of the most productive relationships in business are the long-term ones. You might have a successful business relationship in one venture and maybe not another, but then there might be another and another and another, and that can be really fruitful, I think.
Yeah, the other thing I maybe add in this founder selection piece is that, have you done it before? I mean, that's the most obvious tell. If someone has come to you and they had a successful startup and maybe a decent exit, it's obvious that they're a good founder. And I mean, you still need to check they're a good person and you're going to get on with them and you think they can work it. It gets harder when they haven't done it. And the majority of the founders that we see have not done it. They've come from corporate, or they're super young, or they're from academic, and that becomes harder. So you kind of have to look outside of that. Have you done it before in business, to what have you done in the rest of your life that can suggest you are, as Andrea alluded to, you're adaptable enough, you're resilient enough to be able to roll with the punches in a startup.
And I think actually, as an investor, you'd ideally want to avoid having to pay for those rookie errors, like the founder that's bootstrapped in the garage, or the co-founders that have bootstrapped and working in the garage or whatever, and then suddenly they get an investment, a bit of investment capital, a few million, and then you blink and they've just gotten a bit overexcited thinking that this is more money than God or whatever, and it seems like a lot, and that lack of financial discipline because of the lack of foresight, it's going to take longer than you think to get to revenue or sufficient revenue to, just be self-generating. So, that's one of the things you have to look out for is, are these people, do you think this inexperienced founder is actually going to, have that appetite to learn? As I said, listen, learn, not be resistant to learning. And I don't want people that are going to swallow advice whole. They obviously need to be someone that's going to be discerning about advice, because everyone wants to give a founder advice. And an awful lot of it, they have to be able to filter out the helpful advice from the not so helpful advice. And one other really important thing is integrity. So integrity is really important, and that sharing values, because as I say to the founders, you want to be careful who you get into bed with for the next 10 or 15 years, because most of these early stage relationships with founders last longer than most marriages. So,
Probably
that
true.
integrity piece is really important, and the values sharing.
It matters, right? And life's
Yeah.
short. You want to spend around people with the same sort of values, especially when you're in long-term relationships of any type. It
Exactly.
makes total sense.
Yeah.
You've talked about founders in terms of things like learning, curiosity, resilience, support networks, integrity, those something people have been there and done that. What about anything that goes to what's driving them? Like what about the fire, the things like that? So all those things make a better founder, but what are the things that intrinsically really make a great founder? Do you see what I'm getting at in terms of someone who's going to create and do something? Like lots of people are probably interested and want to learn and all that sort of stuff, but what makes someone really potentially going to be able to create a fantastic business?
I don't know. Look, I think of the really the outstanding founders in our portfolio, a couple of them ex-management consultants, or they've been, coupled up with a co-founder that's got the startup chops. But what seems to characterize them is this sort of analytical discipline. And they're all over their metrics. They know what metrics matter. They know what, levers that they can pull. They're incredibly thoughtful and detailed about their plans going forward. And they're hugely financially disciplined. And that's always seems to be coupled with really being passionate about solving a particular problem.
Yeah, I think that's the word I'd use, passion.
The passion
If you don't have passion, then you've got nothing. Founders that come to this because they think it's going to be, lucrative and glamorous and sexy and cool, it's the wrong reason. I mean, it's the opposite of that. It's brutal, it's dirty, it can be hard. It's often hard. I mean, sometimes you can have incredible highs and lows in the same day or the same hour. I mean, it's just a tough journey. So the ones that have passion can get through that journey better than the ones that are just trying to do it for money or a better career.
Yeah, exactly. And one of those things is it's the passion that enables them to do something really important, and that's engage people. So attract and maintain and motivate a great high caliber team, and they're highly unlikely to be able to pay the market rate. But they're visionaries that can bring people along with them. So in terms of like that team, because they can never do it on their own. They have to be really good at leading a team and attracting investors and other important stakeholders and customers. So that sort of passion is important for all of those things.
Were there any founders that you've met along the way over the years that when you first sort of met them, you went, wow, this person has got it and they're going to smash it? And the other part of that question is, are there any founders that at the end of the journey, you looked at and went, wow, they really achieved more than what we ever thought they would? Are there any people or have you seen that sort of evolve throughout the years?
Yeah, we should probably preserve the names to protect the innocent.
Sure. Yeah.
I don't think anyone's done better than we thought they could.
Yeah.
Because that's why, we've invested in the first place. Others have been tripped up by, some of the things that I was talking about earlier with the sort of rookie founders getting a bit excited and burning through exercising enough financial discipline. Yeah, but I haven't seen anyone do better yet than we thought they could. And some of them are doing phenomenally well, but we just was so excited when we met them. Like, whoa, we want to back these people.
Yeah, and there's no such thing as the perfect founder or the perfect background. I mean, I would say that the founders that we've had that have had background in the big consultant firms tend to be really good. If you can get through this in McKinsey, Bain, BCG principally, we've had some great successes with people from there. And I think it just comes, the bar to get in is super high, so they've kind of passed that initial bar, but also the rigor by which they make decisions and consider it and hire, and just, it's a very structured and disciplined approach. And if you combine that with passion that we talked about before, and that resilience, and, that can make pretty good founders.
Yeah.
It's interesting you say that, because a few of the founders that have been on the podcast that have created really big companies do have that type of background. And I think you're right. I think it goes to the rigor that goes into that. There's an intellect that's there. There's a process there, and you combine that with other things. It's a filter, if you like, or a screening process in some respects. Doesn't mean anything compared to everybody else that's been through that same process, but it does help.
Yeah, and if people are listening to this and it's like, oh shit, I didn't get a job at the big four or big three consultant, it doesn't matter. I mean, like,
No.
great founders can come from anywhere. It's just, on average, we have seen good success from that background.
Yeah, I think the rigor that sort of background brings, and the discipline, having to sort of, as a kid, get the academic results and then get into those firms and all that sort of stuff, I think that then trickles through, and it's been really important. But as Ian says, great founders come in lots of different shapes and sizes, and we've got one founder who's probably close to my age, and he's an ex CEO of a big listed company. A lot of people are a bit ageist. Oh, you don't want to invest in someone a bit older. And he's just done a phenomenal job, and the business, but he knew that business intimately. And when he ran this big listed company, he wanted to do it differently, in a better way. And he's done a phenomenal job.
Yeah.
I was just going to say, I think sometimes people are very simplistic in their thinking. They look for the way, when you say they come in all sorts of shapes, sizes, ages, people look for little ways to simplify the process. But I think that sometimes you shoot yourself in the foot doing that. You do have to sort of take a step back and sometimes make decisions based on merit, right? And what makes the most sense. And it's sometimes that's harder to do, but it probably comes with time and experience, being able to pick those things.
As early as we invest, because it's often pre-revenue, and there are real metrics to analyze. And a lot of it's a lot of art, not science or math. It's just, that sort of gut feeling and drilling in and getting to know them. And it is interesting. I know that when I first meet founders, I mean, everybody else around me, all my team, and everyone gets a bit frustrated, because when I first meet them, I usually spend a couple of hours with them. And that's because I just want to keep drilling down to get to know them, things that little pings in my brain. And I'm just like, well, I've got to drill into this one. What does that mean? And, a lot of taking the time to get to know them and get a feel for them, I think is a really key part of the due diligence.
If you had to break down a decision to invest into its components, or say is the founder or the business idea or whatever it is, what percentage would you attribute to, if you can do something, if you can simplify it that way, to the founder?
Oh, huge.
80.
Yeah.
I mean, like, at the stage we invest, it's all about the founder. If you get that wrong, you have burnt your money. I mean, it really is as simple as that. It's a random number. You can't really put a number on it, but it is absolutely about the founder. And even if you talk to private equity investors, they would say, the management team, super important. But the management team really is just another lever they can pull in a private equity investment. We don't have that lever here. If it doesn't work, I mean, literally, you've lost your money, because you can't, if you're replacing the founder at an early stage investment like this, you might as well walk away. I mean, there's a world where it could work, but, the cap table, and I mean, there's just so many different dynamics that go around it. It's just maybe more than 80%. I mean, it's everything.
Yeah. And I think we've got this founder's a really strong founder, and the sort of global economic environment changed pretty dramatically, which had very direct impact on the whole, almost the reason that the business existed. And I think, we'll all get a moderate return. And anyone less than him, we would have lost our money. Absolutely. Right. I just have no doubt. But the discipline and the rigor, and it's been really very impressive to watch how this founder's dealt with it. It's just been really, really impressive, because I think it's been really hard. Like, so really, really hard.
Yeah, okay. I mean, that's interesting, because if you look at founders and how much time goes into the DD side of things, and maybe it does with you guys because you've sort of defined it that way, but do you think that there's a skew the wrong way in terms of that decision-making process, often within the VC space, where there's more emphasis on the numbers or the business plan sometimes than probably should be? If you're saying it's 80% plus is the founder, you can have a business and a business idea that might not be great, but if the founder's outstanding, they're going to work it out, right? Which is sort of what you're getting at. They're going to solve the problems. Or does that sometimes it's a red flag on that? And even if they might be great, maybe this one's not the one, but the second time around might be the time.
Yeah.
You do need both. I mean,
Yeah.
we've got a great founder who had a business idea that they wanted to get off the ground, and we didn't think it was quite right. And so we didn't want to back it. I mean, so yeah, look, the 80% is accurate, but it's like a gate, the 20% has to be good, and that's really where you can apply the due diligence. So it's, the market's got to be big. That's probably the next biggest thing.
Okay.
And I think it's important to understand that I think that the importance of the founder increases as you get towards the end of the spectrum. The earlier the stage it is, I suppose, and the later the stage of the company, the less important the founder is, because the more mature the company is, you can replace the founder or the CEO or whatever, and okay, things might wobble, but it's recoverable. And it can go on to thrive. But as early as we invest, if the founder sort of messes up or whatever, or they have a fallout or something like that, you've often lost your money. I think that's one of the big differences, when a lot of family offices and, high net worths, that I've met over the years, and they've got, oh yeah, I met this great founder on the plane and I invested and blah, blah, blah. And I got very badly burnt. Yeah. Or I've even tried that 2 or 3 times, I got badly burnt. And then you talk to them about it and you realize that they've actually looked at it with the same lens that you would look at an SME rather than a very early stage startup. And they haven't put enough weight on the caliber of the founder. And sort of as early as we look, they all come to you with a deck sort of forecast page with this great, hockey stick curve upwards. And they all come with that. And it's a bit meaningless, really. It's more about how thoughtful, you have to work out how thoughtful and careful and how good they are at planning and engaging people in their vision, I think, and aligning everyone in the right direction and prioritizing and understanding what's important, all those sorts of things.
In terms of the spaces that you're looking at, the types of technology, what are the most interesting areas that you're looking to invest in? Do you have a filter on that side of things in terms of where you want to put the money?
Well, we have a very strict no harm filter. So we don't invest in anything that supports things like gambling or even alcohol, that type of thing. And we have a strong bias to things that, just have a positive impact, I suppose. So we're super keen on things like sustainable energy, circular economy, all that sort of stuff. We haven't done very many investments in those areas because a lot of it's, really capital intensive hardware. And, it's not really that suited for venture, or at least not for us.
We have just done one renewable one. We haven't announced it yet, but to be announced, that was a good one.
Yeah.
That's more around the business model than it's not hardware. I'll say this and then you can talk about the deep tech stuff, but we're like typical VCs. We love B2B SaaS. I mean, it's a great model. I mean, it's high margin, it's scalable, targets a niche. I mean, there's so many good things and it's global. So
it's
many
proven, right?
Things. Yeah, you love the B2B SaaS model as most VCs do, but we do love deep tech, and I'll let Andrea talk in that.
So just one thing about the B2B SaaS, I do think that, there's been a modification of people's views in terms of, that expectation of round after round of capital just to acquire more customers and to sort of fuel growth before, we do want to see a pretty firm eye on break even and profitability and a plan to get there. But we love deep tech. I mean, I get very, very excited about deep tech because I think some of those are real swings for the fences that can have a huge impact on the world. Like Quantum Brilliance is one of our portfolio companies. And when we invested in them, they wanted to get, their plan was to build a fully functional quantum processor the size of an iPad, I think, that you can plug into supercharge you.
Qubit that works at room temperature. That's the punchline.
Yeah, that's the difference, is that's the technology that allows to have things very small, because the big supercomputers have these huge cryogenics that mean that they're not portable, you can't do anything with them. But anyway, now they're looking at building it the size of a thumb drive that's going to supercharge all our laptops and phones and have it'll change the world as much as, computers did or mobile phones.
We put money into 2 space businesses, so we
love
the
space.
Space world.
Just let's take a step back for a second in terms of just maybe give us a little bit of the people listening, define what deep tech is.
the key value proposition is absolutely around the technology rather than a technology that's enabling something else. So, I mean, we've done carbon sequestration in Fugu. We've just done this satellite propulsion business. Again, we haven't announced it. What else we done? We did a couple of computer vision companies. So again, their model is kind of B2B SaaS, but they are pretty deep tech with the way they've gone about it.
Yeah.
What about for a someone who doesn't understand tech at all? How would you describe or explain what deep tech actually means?
Yeah, I think that's the simple definition is just around that. The value proposition is based around the core technology. So it could be software, you've got a better algorithm or a way of doing something, or it could be hardware. You built a quantum processor or a carbon sucking machine or a satellite propulsion system.
I think the real defining feature of deep tech for us is that it's really complex technology. That in itself, the complexity of the technology is not easy to replicate. So that in itself is a massive moat. So the deep tech, the complexity, I think, is the defining feature. It's not a business that's utilizing AI tools that have already been developed elsewhere, but it's a business.
This is the 0 to 1, right? The Peter Thiel type 0 to 1, not the 1 to N type stuff. This is.
Yeah, I guess at that invention stage, yes. I mean, they obviously need to scale it. I mean, those are the questions we ask when we invest in a deep tech company. Question one is, can they build it? I mean, quite often when we're getting to them, they haven't actually developed the product.
Yeah.
I mean, we've had a few academics. Christoph at Jelix was an academic, and that was his background. So our first question was, well, can you build the product that you're saying you can? And normally you'll get through, you do enough validation, and we normally bring in external experts to help us in that because we're not experts necessarily in that. And the second question is, can they scale it? So the first question is around that 0 to 1, and the second question is around that 1 to 100 billion or whatever the number you're going to put on it is.
Yeah.
And that's hard because you need to be a good founder at that point. So yes, you need to be a great inventor, and that's 0 to 1, but you also need to then migrate to be a great founder, which is people, culture, finance. I mean, the mechanics of running a business for a lot of academics, again, it's that untestable piece. So you quiz them on it, and who are you going to surround yourself with? Who are your first hires? I mean, some of these questions will come out in that process when we're getting to know them.
You said you love space what is it about space that you find so interesting?
It's the final frontier.
Yeah, I was going to say that it is. It's the final frontier. It's so exciting. It's adventure. It's exploration. There's so much potential out there.
The impact of private industry and space in the last 20 years really has been incredible. I mean, up until then, it was you had to be a government to do it. But I mean, what SpaceX has done with their Falcon program and the Starship that's coming is unbelievable.
Yeah.
There's going to be, I think, almost 100,000 new satellites going up into orbit in the next 10 years. And all those satellites need power systems, they need propulsion, they need communications. I mean, those satellites will impact. I mean, what SpaceX has done with Starlink is incredible. And we do not for harm piece is a good component of it. I mean, what we don't love necessarily is, you'll often see in the economic statistics, they lump space and defense together. We don't love that because there's plenty of non-defense applications of space. So we actually think that, if you think of climate and there's plenty of things that satellites and the space industry can be doing for good on the ground. We definitely love that industry because of the growth, and there is a moat around it. It's pretty hard. Building a space component is difficult. I mean, you're sending it up there. It's a horrific environment. There's vacuum. It's freezing cold. It's boiling hot. Cosmic rays and radiation. I mean, it's pretty nasty. So building something that's going to work up there for 5 years, is, and costs a lot of money to get up there. That technological barrier is huge.
What's a theme or a mega trend that you see that's probably underrated? Is it something like space, or is it something that other people are not putting the weight on how important it will be in the future that you can see is really important?
The reality is we need more power, and it's got to be generated without burning fossil fuels. Whether that's nuclear or solar and wind are the obvious ones. Splitting that to hydrogen, the storage solutions around this, heat or batteries or pumped hydro or gravity-fed machines. I mean, there's a lot of different ways of doing it. But the reality is the world is going to need more power and more reliable power without cooking ourselves. And I think that's one of the macro themes that we've seen. You know, look, as Andrea said before, it's tough sometimes at a seed stage to find investable opportunities like that because they tend to be incredibly capital intensive. But there's definitely some out there, and there are software layers that will go into that we're definitely interested in.
And I do think space in Australia there's an under excitement about investing in space related startups, and I think that's going to be huge in the future.
Yeah, Gilmore's about to launch their first rocket.
That's
They
exciting.
built the green light. You know, if they get that off the ground into orbit, that'll be the first company ever to do it in the first try. So good luck at them.
Getting that off the ground is such an appropriate way to describe it. But what about in terms of advice that you've been given over the years? What's a piece of advice that really stood out to you, for both of you, in terms of the business journey or venture, whatever it might be?
I mean, you've had a lot of mentors in your journey. I mean, I think,
I've had some amazing mentors that I am just incredibly grateful to for their generosity. People like Daniel Petrie, co-founder of Airtree, and Rick Baker, co-founder of Blackbird, and Michelle Deeker, One Ventures. And they've been unbelievably generous in just their support and just being there almost at the end of the phone for me. And I've just been enormously grateful. But I can't think of a single piece of advice someone has given me. But I think one thing that I do say to other people that I think has been quite defining for me has been if the door is closed when you knock on it and you really want to get in, you've got to go around the side and find a window and climb in.
Yeah.
And you've got to find a way to do it. And so don't give up when the door is closed in your face.
Yeah,
I like that.
Andrea sometimes keeps her light behind a bushel, but I mean, like, I don't think there's anyone else that really has gone from nothing to have launched and run a, fairly significant venture fund the way she has, despite a bunch of hurdles. I mean, there's numerous reasons that it'd be impossible to do something like this. And most people, when they see that impossible wall, they get blocked by it. But, you tunnel through it, you jump over it, you go around the side, whatever. And Andrew's been great at that.
Yeah.
Thank you. But I have to say that sort of goes back to my long-term relationship thing. Ian has been, really supportive, and it's been really hard at times. Like any founder of any business, there's been some big ups and big downs. And, I remember very early on, and I just thought, I can't do this by myself. And Ian and I had a 3 or 4 minute discussion about whether we should take out a second home loan to fund, getting some help for me. And then we hired a CFO and another investor. And that was just phenomenal. But, Ian kind of said, well, if we lose our home and, we take out the second loan and we lose our home, it fails and we lose our home, would you regret it? And I realized instantly I wouldn't, because at least I'd tried. But I would definitely have regretted it if we didn't do it. And I just couldn't make it. I would have regretted it if I hadn't backed myself and tried, I suppose.
Yeah. And look, Dion, I'll give you a quick answer on that one. I mean, my 4 years at Amazon were really eye-opening. Amazon is an incredibly well-run organization. I mean, it's one of the big 7 incredible tech giants in the US. It's $2 trillion. I don't know what the market cap is now. But the way that they instill culture throughout the organization is unbelievable. So I learned a lot from my 4 years there. I mean, it was a half-day training course just to be allowed to interview someone. So they talk about the leadership principles, which when you go in there, it just sounds like bullshit and something you put in the wall and forget. But the place lives and breathes and runs off the back of those leadership principles. So it's the importance of culture in any organization's success was really, I think I knew that kind of instinctively, but what I saw was just how that can work at scale in a massive organization like Amazon, and that's across the, retail side, their Prime Video, their Kindle, their AWS. I mean, it all has the same 14 leadership principles that the whole place runs off the back of that.
Yeah. I mean, that's relatively unique, right? Because a lot of bigger companies lose something in terms of their culture as they get bigger. So to see it really working in terms of the way the culture is not just preserved, but the way it's communicated, that's pretty unique.
Yeah, I can't really comment. It's been my only corporate experience, but I think that is somewhat true. You know, and look, Amazon is a tough culture. I mean, like, they work you really hard. There is no doubt about that, but they are really driven by, you know, customer outcomes and success. I mean, it's all about results. Again, it attracts a certain type of person. Like, if you don't thrive in that quite high pressure environment, you're maybe not going to make it at a place like Amazon. But having spent 12 years running my own startup, I probably worked harder at Amazon, but the pressure was a fraction of what it was running your own business.
Yeah.
So I kind of saw both worlds from that.
Interesting perspectives. What about people that you both have looked at over the years, either that you know or from afar in business or any area that you sort of look at, either they inspire you or you really respect the way they go about things? Any people that come to mind?
Oh, for me, I think we're very lucky. I will get to your question, but it's going to be slightly roundabout. I think we're really, really fortunate in Australia in our startup ecosystem because we've got an ecosystem that is characterized by, you know, people being gratuitously helpful and supportive and wanting to, you know, support the sort of newbie founders and, you know, like me, a newbie when I was a newbie funds manager. And, you know, and I do think culture gets set from the top. And I do think good human beings like, you know, Mel and Cliff at Canva and Mike Cannon-Brooks and Scott Farquhar at Atlassian and, you know, Daniel Petrie at Airtree, like, he's not there any longer, but I think he was very impactful on the ecosystem, and Rick Baker at Blackbird and Michelle Decker at One Ventures. I think all these people have had a really huge impact on the culture of the ecosystem in terms of being helpful and supportive and constructive and wanting to, you know, leave the world a bit of a better place.
And Ian, to you, anyone that you really look at the way they operate?
Yeah, I'd call out the big success stories in Australia. So Canva and Atlassian. I mean, Canva, for so many reasons, it's an incredible business led by an incredible woman. I mean, I don't know Mel well. She kind of is a very internal focused CEO. She does some, you know, public stuff, but not much. And just the way they've gone about building that business, but also the way they've now gone about thinking about philanthropy off the back of that.
Yeah.
And the way they've gone about, I mean, they really have defined the Aussie venture landscape. I mean, Blackbird is still the biggest investor in Canva, and, you know, their first fund is, I mean, I don't know the numbers, but the first fund will probably return 30 to 50 times capital. I'm not sure whether that's actually accurate, but it is an unbelievable success story. And Atlassian too. I mean, those guys, as well as building a great business, they're starting to do some really good things with that wealth and influence. So yeah, absolutely, they put Australia on the map. So, you know, when I travel internationally and talk about the startup ecosystem, everyone's heard of Atlassian and Canva. A lot of people don't know Canva's Australian. Dominates Surrey Hills, and it dominates the startup landscape here, and, you know, and it keeps growing. I mean, they're profitable and they're growing at 50+% a year from that massive base. I think that's a number. Unbelievable.
Yeah. Amazing business.
So Canva's doing its philanthropic work, and I think Atlassian, wasn't Atlassian the one that started the 1% pledge?
Yeah.
You know, for founders and you know, to donate % to a charity of their choice or whatever they felt was important. I think those sort of values and then acting on them and not just talking about them like that, I think it's been really a huge positive impact on the whole ecosystem.
That's very true. In terms of Jelix, what's next for you guys?
Well, we're almost about to start raising our next fund. It's probably not the world's best timing.
Yeah, I think a lot of the uncertainty in the world is coming back. You know, there's some geopolitical risks around the world, but overall, I think interest rates are coming down, maybe not in the US, but locally, it does feel, you know, the job postings are up and sentiment seems more positive. This is a great time to be an investor in early stage startups because things are relatively cheap. You know, both globally, like Aussie startups are better priced than their US and European and Israeli counterparts. But when they exit, they're valued in a global multiple. So you've actually got a better upside. And the best time to invest is when no one else is really that interested in it. So we actually think seed investment at this stage in a 10-year plus fund with the technology changes that are coming. And you think about the massive changes over the last 30 years, you had the internet itself, you had mobile phone adoption, you had cloud computing and AI. They're probably the big four. And the impact and the pace of adoption have both been increased. Both of those factors have increased with all four of those trends. So what else is coming? I mean, the next 10 years is going to hold even more excitement. I think technology is just going to get better and the economic cycle is going to improve. So yeah, seed stage investing is where it's at, but we are kind of biased.
We're biased. But I do think it's really interesting that, during the GFC, those endowment funds in the US that had exposure to venture, they were able to meet their financial obligation, and most of those that didn't have exposure to venture weren't. And I think that was a lot of what accelerated that flood of capital to venture pre-COVID. And investing in startups and investing in venture early stage like this, it's a long vision that you have to have. And it doesn't really matter the ups and downs of the economic, it looks through the ups and downs of the economic cycles. And I think now's a great time.
That might dictate how easy or hard it is to raise money, perhaps sometimes. But in terms of what's going to eventuate in the business world is business is going to grow and innovation is going to happen no matter what the general economy is doing.
Exactly.
Right.
And so I think, while market sentiment is a little bit depressed, which is why I was sort of expressing a bit of uncertainty about the environment to raise funding now, it's a really good time to invest in venture, I think. And, you just have to think back to all those huge success stories that were founded during the GFC. What have we got? WhatsApp and Insta and I think, Uber and some of the really big ones.
Oh, there's so many good examples of businesses that can grow no matter what the economic cycle or where the economic cycle is at, because that
Exactly
largely doesn't matter, right? Because innovation sort of transcends that in many respects and find its place. So, no, I think it's really exciting and really excited to see what happens next with you guys, and good luck with raising the fund.
Thank you so much. Thank you for having us on your show.